One of the most common questions that I get is what type of business entity should I be? There's many choices to choose from. When you first start your business, then if you don't do anything, you'll become what's known as a sole proprietorship. The IRS would just tell you to include your income and expenses on a Schedule C of your tax return. The benefits of that is it's easy. The negative is, again, it's not the most tax effective. You can have some tax savings by some other entity choices. Frequently, you'll see another type of entity called a LLC, which stands for Limited Liability Corporation. A limited liability company is not a taxable entity. It is an entity that is recognized through the Secretary of State. The LLC is easier to maintain the protection from a legal standpoint from liabilities from other companies. The IRS just ignores that structure by itself. You have to elect to be taxed as a different entity if you want to be taxed as other than the default of a sole proprietorship. In other words, if you can just as LLC by itself, you're going to be taxed as a Schedule C as if you never set up the LLC to begin with, because again, the IRS just ignores it. Now, you can elect for the LLC to be taxed as another type of entity, whether it can be taxed as a corporation or an S corporation, but you do have to actually make an election with the IRS to be able to do that. Another entity is a C corporation. A C corporation is one that the company is a taxable entity by itself. That means the company pays taxes itself, but when it pays out dividends to you as the owner, then you have to pay taxes on the dividend. So a C corporation is subject to what's commonly referred to as double taxation. If you as a shareholder are in a higher tax bracket than the company would be as a C corporation, then it may make some sense to be taxed as a C corporation. But speaking of S corporation, that is the one that's the most common type of entity in the small business world. An S corporation can be, as I mentioned before, it can be an LLC that is electing to be taxed as an S corporation, or it can be a separate corporation that you file with the Secretary of State as a corporation. First of all, you would become a corporation with the Secretary of State, and then if you decide to be an S corporation, you then go to the IRS and say, I want to elect to be an S corporation using Form 2553. The advantages of an S corporation are you maintain that legal protection from the corporate or LLC veil, but you also have some tax advantages in that the profits of an S corporation are not subject to self-employment tax. So as an LLC or a sole proprietor, if you don't make an S corp election, you're going to pay self-employment taxes on the entire profits that you make from the business. And that self-employment tax is a little over 15%. So let's just use an example. Let's say you have a business that you have $100,000 in profit, just for example's sake. Well, for $100,000 in profit, if you were a sole proprietorship, you would be paying a little over $15,000 in self-employment tax on that. Well, if you set it up as an S corporation and you paid yourself that reasonable salary that they require, let's say that number is just, for example, say $60,000. So the $60,000 would be subject to Social Security and Medicare, but the $40,000 profit left over would not be. So the $40,000 times 15.3% would save you a little over $6,000 in self-employment tax. So at those numbers, it does make a lot of sense to go ahead and make that S corp election, even if you're set up as an LLC. So that's probably the most common structure that I see nowadays, is that you go get an LLC because it's the easiest to get your legal protection. But one of the issues, again, is this reasonable salary that I mentioned. That is a gray area. It's not hard defined by the IRS of what that number should be. There's no set percentage. You may hear some people say, well, I'll just always pay myself 40% or 50% or whatever. Well, that's better than nothing, but if the IRS were to come in, they're not going to just look at a percentage like that. They're going to say, well, how much would you make as an employee of another company if you were doing the same thing? That would be one thing to look at as a reasonable salary for yourself. Or another would be, what would you hire someone else to come in and worked for you, what would you pay them? That could also be a reasonable salary. Those are the main different business entity structures: the sole proprietor, the corporation, and S&C corporations. One I didn't mention earlier was there are some partnerships. If you have an LLC with another LLC member, unless you elect to be taxed as an S corporation, they default on that as a partnership. The profits on that partnership are still going to generally be subject to the self-employment tax. So again, it probably does make sense if once you become profitable that you should make this S corp election instead of being a partnership and save the self-employment tax. As you see, there can be a lot of different factors that go into determining what is the best entity structure for you. But if you have any questions on that, we're always here to help. And so you can always reach out to us through our website. You can find us at sdacpagroup.com, and we'll be happy to help.